watching Power Lunch South Africa. Now, oil prices are under pressure today as U.S. crude production led to a surge in inventories, with looming effects of hitting the global markets soon. Although for now, outside the U.S., the oil markets remain solid amid the political crisis in Venezuela. Stricter U.S. sanctions against Iran and OPEC continue to withhold supply. For more on this and the markets and what it means, we join now via Skype by Lukman Otunuga, research analyst at FXTM. Thank you, Lukman, for the time. So this U.S. surge in production, is that the only reason we can cite for the pressure on oil prices, not the global economy as well?
Thank you very much for having me here today. Yes, we've seen oil prices trade very low today due to robust production in U.S. shale. There's another reason why oil prices are trading low is the fact that we've also received reports that Russia was not in compliance with the OPEC production cuts. And when we add the fact that you still have the narrative of a slowing global growth, which is seen as a threat to impacting demand for crude oil, we can understand why prices are trading where they are right now.
So if you take out this U.S. production story and just focus for a moment on the compliance of the Russians, would they be the only ones who are breaking the rules here?
So in regards to that, we've received reports that so far it's just Russia, but we still need more time to have more information on this. Looking at the bigger picture though, as we said earlier, what is really driving oil prices now are oversupply concerns. But if you looked at the movements we saw last week, we saw that there's still concerns over supply disruptions, especially in Venezuela, and sanctions in Iran, possibly creating supply shocks in the short term.
Yeah, and that U.S. production surge, how sustainable is that one?
Well, it's been a trend. We've seen that U.S. production has actually been moving consistently in the previous months, and it's actually been one of the main themes that have created oversupply fears in the markets. For as long as this continues, the upside in oil is limited.
All right, right. Okay, what about politics? We know Donald Trump keeps an eye on the oil markets, even as far as it affects, of course, his ability to keep the U.S. economy growing. To what extent is the market listening to the U.S. president, do you think?
Well, when we look at the oil's valuation in recent weeks, we can actually see that the commodity does remain highly sensitive to anything Donald Trump says. For example, last week, he stated that he called OPEC to raise production. And on this news alone, we saw oil prices trade lower. So politics do play a role in oil's valuation. However, it's all about the supply and demand dynamics.
We're certainly not complaining about oil prices being under pressure. Perhaps they could do a little bit more, because we've seen our own rand here in South Africa coming under a huge amount of pressure. If you look at it today, actually the picture does not look very good at all. And so we're sitting above that 1450, 452 to the dollar. And one wonders for how long, because people keep saying there's got to be a relief rally post the elections. But come on, the elections are just a few days away.
It's interesting what you were saying. When I saw oil prices trading lower, this should be a welcome relief for people in South Africa, you know, especially when considering how international oil prices do impact petrol. So looking at the rand's outlook, though, we see that the rand is weakening today more to do with external factors rather than the domestic situation. The main reason why the rand is depreciating is the fact that the dollar remains supported ahead of the U.S. jobs report later this afternoon.
Absolutely. I saw a report from one of the local banks here, Standard Bank to be precise, saying that the rand remains undervalued at those levels. I keep asking the question, is that a view that you guys share?
Well, for us to come to a conclusion to this, we need to wait for how developments play out in the second half of 2019. I mean, so far, when we look at economic data from South Africa, it's been mixed, but we have to keep in mind that it's all about the external drivers. We need to see how US-China trade developments play out. If this narrative of a slowing global growth continues to remain a theme, and naturally, dollar's valuation and crude oil prices.
Yeah, and the outlook of the global economy is, of course, an important consideration in that. Where do you guys stand as far as this on-off again story about the potential of a greater slowdown in global growth and, of course, the impact that it will likely have on emerging market currencies like ours?
Well, if you could imagine the global economy as an apple tree, every apple is rotten except for the US economy. And this is the narrative we're seeing right now. While the US economy is doing well, when we can see with recent economic data, everywhere else, if we look at Europe, if we look at the United Kingdom, if we look at Japan, even emerging markets, everyone else is facing the heat from the whole concerns of a slowing global growth. So this is something that we'll keeping a very close eye on moving forward in the second half of 2019.
Indeed, we shall be keeping a close eye on that one. Lukman, thank you for your time and have a good weekend.
Thank you. Have a good weekend as well.
Lukman Otunuga, research analyst at FXTM, joining us via Skype from London. Moving on, at Africa's